Welcome to another episode of the Straight Up Chicago Investor Podcast. I'm Tom Shellcross, licensed agent with Second City Real Estate. With me, as always, is Mark Ainley, founder and owner of GC Realty. Mark, it's sunny. How are we doing over there?
Man, it is sunny, and it's Monday, too, and I feel good, man. Like, last Friday was, we recorded last Friday, we felt good, so I got a lot of energy to bring today's show, and today's guest is awesome, too, so.
Yeah, we got a lot to talk about. We're covering my neck of the woods, too.
Yeah, but first, let's talk about what happened to you in your neck of the woods, dude. That's hilarious, just the little part you gave of us already of the story.
So I'll keep it brief, but we have a 6-unit building we recently purchased. We were tipped off by one of the tenants that one of the kids in the building, so one of the tenants' sons, who's, I don't know, like 12, 13 years old, like he's a kid, was stealing quarters from our laundry machine. I figured out how to jimmy that. And I caught him in the act, him and his buddy. So after, like, this has been going on for like a week or so, caught him in the act. They had, like, I don't know, 25-foot head start. I chased them down and actually caught him and tackled him, which I think the first person I've tackled since I was, I don't know. It's been 20 years since I've done that, and I felt awesome.
Well, so were you staking out the place? Was it just coincidentally you caught her at the time? Like go deeper on this. This is hilarious.
Was not staking out the place. Had been intentionally being there more often. Was actually going to talk to his mom. His mom, super nice, awesome, like great tenant, you know. And I was going to talk to her and be like, hey, like, this is what's going on. Like, I kind of have a little bit of evidence. I'm not going to make accusations. And I was going down there to grab keys for something else and caught them. They were running out, and so I took off on foot.
Well, you had two of them. How'd you, like, you got to break this down a little more. Like,
one,
which
so
one to
the
go
kid,
after?
it was him and his buddy. He ran up the stairs to his unit, which I didn't realize. The other kid ran out. So I chased the other kid down, caught him, and then when I had him, like, his backpack came off, which had, like, a Chromebook or something in it. So I grabbed that had the quarters in there, too. And I was like, all right, like, what's going on? Like, you know, and he was at first not saying anything. And I was like, all right, like, I'm getting the cops involved, pulled out my phone, and then he ratted his boy out. So we walked back to the unit, knocked on the door. And as soon as the mom saw that kid, I guess that kid's like trouble. She's like, God damn it. And she got her kid over there and smacked him. So I got everything taken care of. I got my keys back. That's what they had done. They'd stolen the keys, which is a whole nother story. But everything ends up all right here. It was pretty funny though. First time in a while I had an incident like that. I felt pretty good about myself.
Man, that adrenaline, dude. That had to be kicking there. Like that's awesome.
Yeah, and like, you know, you chase him and you tackle someone running full speed. You kind of he was a kid. He's 12, 13 years old. I was like, oh shit, like everyone's okay though.
Oh man, that's so awesome and messed up at the same time.
Yeah. Well, because that's passive investment, man. They sometimes take some work.
Yeah, congrats. I mean, that's a big. I imagine those are one of those annoying problems that property managers like, man, how do we handle this? Like, because you don't want to go sit there and stake it out. Like that's tough.
Yeah. So, all right. So, what's your housing provider tip of the week besides, you know?
I don't know, man. Like, I got nothing.
In shape so you can chase down hoodlums.
Our guest today's got a tough act to follow up on that story, man. That's awesome.
He does 75 hard, which we'll talk about. He's got this. He would have caught this kid a block before I did.
All right. So, housing provider tip. This is something that we started, I think, a couple of years ago. But your leases, a lot of leases end at midnight on the last day. Ended at noon. That way you can go there and do your work that day, and maybe even have someone move the next day. So give yourself that other half a day head start. It's becoming more of a norm around Chicago. So make sure that your leases are ending on the 30th or 31st and at noon versus at midnight.
Yeah, absolutely. Otherwise, how are you going to turn this thing over? So, all right. Our guest today, man, I can't believe it's taking this long to have him on. So I'm excited for this today. We're going to be talking, like I said, about the Northwest side a little bit. You either know him as the Wagner Report dude or the 75 hard dude. But he is the managing broker and owner of Greystone Realty. His brokerage requires all of his agents to actually be investors themselves. He owns his own portfolio on the Northwest side, which we'll talk about. Sold over $60 million in real estate. As I mentioned, the creator of the Wagner Report, which we'll get into. Without further ado, Jason Wagner, welcome to the show.
Hey, what's up, guys? Thanks for having me,
man.
Yeah, thanks for having me. First off, like, I wanted to first acknowledge you guys because one, you know, what do you say? What do they say on radio? It's long-time listener, first-time caller. But first off, no, I think you guys do an amazing thing for Chicago and the Chicago investors. And like, I wanted to acknowledge you because, you know, you guys are consistent and you consistently put out a good product. And like, you know, I think in terms of like building a brand, you guys do it so well. So Just something that I admire about you two both is that, consistency matters. Is, from most of us are going to be entrepreneurs on the investor side, but even on, my side as well. Consistency is what takes you to another level. And I just wanted to say, good job.
We appreciate that, man. We'll take all the kind words we can get.
Yeah, for sure, man. For sure. So consistency. I mean, 75 hard is consistency. Tell us how you got in, why you thought you should do that. Tell the audience, those that don't know what 75 hard is, give us a rundown of how you ended up doing that.
Yeah, and I love that we're starting with this. This is great. So 75 hard is a mental toughness challenge, guys. And it's really 5 tasks that you have to do on a daily basis for 75 days. And I came across of it because one of my really good friends ended up doing the program. And I watched him during his journey. And I'm just like, you know what, dude, I'm too, I'm running a business. I'm way too busy for that stuff. There's no way I can do it. And the tasks that you have to do every day, you got to work out twice a day for 45 minutes. One of them has to be outside. You have to drink a gallon of water. You have to take a progress picture every day. So that's like a selfie. And then you got to read a self-development nonfiction book. And you have to follow a diet, which basically means no alcohol and no cheat meals like pizza or something like that, or candy. So you do that for 75 days. And then, like, over the course of time, you really realize that you have life that throws you curveballs. And it's the challenging days that you have where it's like it's 9 p.m. and you still haven't done your outdoor workout and it's raining outside. And a lot of people would just, pack it in and say, that's it for me. But when you're on day 45 and that happens, there's no way that you're going to just stop there, right? You're going to continue. You're going to go outside and you're either going to do your push-ups outside or you're going to just walk, right? And so that's what I ended up doing. And just like the toughness that comes from that whole process, believe it or not, guys, it's taken my business to a whole nother level. It's taken my confidence to a whole nother level. But it's not my story that I love sharing with people because I'm a huge advocate for this program, but I actually share my wife's story too, because she's a mom of 2 and she had just had her second child, our daughter Layla. And she was kind of like, she just quit her job and kind of like in this identity mode of like, who am I now? Am I just a mom? Am I just a stay-at-home mom? What am I going to do next? And she literally has gone from being like, kind of at the bottom of where she was kind of mentally there to now the top. This last weekend, she was trying out for the Cincinnati Bengals cheerleading squad. And so she went from, she's 34 years old. She went from being a mother of 2 to now she's at the top of her game. Her confidence is off the charts and she's going after big goals. And that's the story I love telling people because it's not just like what it can do for you, but it's what it can do for the people around you that do end up doing that and how much that improves your life personally. So that's the big thing on 75 hard. That's why I push it so much. I love her story. I love my story. And I have a goal this year to influence 100 people to take on 75 hard. And I'm at 24 so far. And it's literally the same result. Everybody comes out and says, boy, I'm at the highest and best version that I've ever been. Because I've been doing this stuff. So
perfect. And we're going to put the sign-up sheet for you to influence people that want to commit to that right here on the website here. So check that out here today. It'll be up there.
Yeah.
One question before we move on to
public display. I like it.
Yeah. One thing we'll put out, did you do 75 days straight? Did you have to start over? Because if you get to day 45 and you mess it up, you start over, right?
Yeah. Right.
All the time.
Yeah. So I've done it 2 times. So the first time I was able to do it, no problem. And it was 75 days straight. The second time I did it, I caught the flu and had to start over. So I started over the next day and then I caught the flu again. And I said, I'm not going to fail this time. So I actually ended up getting myself out of bed when I could not move and I was able to kind of complete those tasks. Ended up throwing up at the end of that. But those are big moments. Those are big moments that you end up remembering. It's like embracing the suck, embracing the moments that really, really suck. And I kind of relate it to I was flipping a house one time and I remember just like my contractors ran away with my money. The project was almost at a standstill. Nobody was coming to work on the job. And I'm just remembering those are really sucky moments, but you get through it, right? And there's so many lessons that you can learn from those sucky moments. So embrace the suck and you end up growing from that.
For sure. We'll upload the pictures of him with flu throwing up outside his house on the front of the website as well, too.
Perfect. So, all right. So, Jason, let's talk about your portfolio here. So, we're going to talk about the Wagner Report. Before getting there, how'd you end up in my neck of the woods, right? How'd you land on Jeff Park?
Yeah. So I'm like Jefferson Park, Portage Park, for most of my stuff, and then Belmont Cragen as of most recent. And it's funny because you know what? I didn't grow up in Chicago. I grew up in Elgin, and we would come to Chicago maybe once a year, but I never learned the real estate really growing up, right? So it wasn't until I decided that I'm going in full time. Hey, I wanted to buy a multifamily. I wanted to buy my first house hack, and the issue is that I had no idea where to go. And I think most first-time investors have no idea where they should be looking for multifamily investments. Now, I had recently just gotten licensed, and I have a kind of a data and analysis background. Prior to real estate, I was at Allstate Insurance doing a lot of like financial analysis and did a lot of Excel and charts and stuff. But agents have so much data at their fingertips that I just went to the data and I said, well, where can I find 2 to 4 units that are appreciating at a faster than normal pace? And it literally stuck out as Portage Park was that neighborhood that was on an average like between 5 and 7%. And I said, let's go there. I wasn't looking for huge growth. I was looking for where can I find like growth at a reasonable price. And it was Portage Park. So I said, hey, Rach, let's just go on a weekend and let's just go start exploring and see what the neighborhood's like. And then we finally bought our first 4-unit in Portage. So
that's awesome. What if you don't mind sharing, give me some intersections. Where are you at? Where's that first?
Yeah, this is Sunnyside and Linder on that one. And then I've got another one that's just a 5-minute walk at Leland and Milwaukee.
I know exactly where you're at.
Yeah.
So I'm going to come creep by you now. I make that Sunnyside ride all the time so I can avoid the main corridor.
Yeah, Sunnyside's kind of like that cut-through area where, Montrose gets, Montrose is heavy, but if you go up to Sunnyside, you can kind of cut through a little faster.
Well, I got one of myself on Linder a little further south of you, so I know you're either a 5200 or a 5300, depending on what side you're on there.
Yeah, exactly.
You could hire Tom to run security on your fine laundry as well, too.
Yeah, man, if I see any teenagers running, let me know.
Got it, man.
Hired. So, all right, so what, you anchor down, you get one here, like, what have been some good and or bad surprises in the neighborhood from someone who came from Elgin?
Yeah. I mean, good surprises are like, Portage Park, Jefferson Park area. I mean, for most part, it's family oriented, man. It's working class, and there's not a lot of like hopping stuff to do, I would say. You kind of still need to find, the restaurants to go to, and there's not like a huge bar district. I mean, I guess you could call Six Corners as that, but there's not a ton of activity on that front. And so it's, but overall, I've been relatively it's been good, man. It's been great to raise a family here. My house hack was where my daughter was born. So I've enjoyed it.
Yeah.
It's also one of those areas, like for me as a real estate agent, it's right off of 90 and 94. And so it's so easy to access the city. And so it's 2 minutes to get to 90. So you can zip down into the loop, or go out to the burbs. So that's one of my favorite parts about this area is just the highway access that you have.
Yeah. That's one thing where if you would have asked me, call it 7 years ago, because Jeff Park has the Blue Line station there. We got easier access to the Metro. I would have guessed that Jeff would have popped more than Portage. It's been the inverse. I would have been wrong if I made that bet. I'm surprised Portage has taken on more appreciation than Jeff, just given the proximity and just the closest transportation with Jeff.
Yeah.
So.
Yeah, and it's interesting. I mean, they're almost neck and neck now in terms of pricing, which has been fascinating. Because Jefferson Park actually always kind of had like this, Beaubien Elementary School was kind of like the premier school, and it still draws a little bit more pricing, and more expensive pricing in that district. But I think it's been fascinating to kind of watch because it almost has been starting to level out as you kind of like come out of that district and into the more of the Portage area. So it's been interesting to see just over the last couple of years.
Yeah, no, absolutely. So talk to us a little about, it's hard to find inventory here, right? And anything that goes in the market, anyone with an investor hat on, be like, man, like, how do you make those numbers work? Because people are paying a lot. It's a nice area. People want to live here. And there's some people who are house hacking just for the sake of house hacking, right? This isn't a long-term investment for them. It's just, this is easier than buying a bungalow, right? I'm getting some supplemental income. So talk to us a little about, like, what are you seeing out there today, whether it be price per door, I guess in a good point, talk about the rents. We've had this conversation offline. We've both seen dramatic rent growths here. Just give a lay of the land for someone who is probably unfamiliar with the area. Loaded question, but just take the mic for 2 minutes and go.
Yeah. So, so just for the area, like, I want to start with rents because that's been the most impressive growth that I've seen. So just in overall market, Chicago in general, Chicago has just seen a big surge in pricing and rent. When COVID happened, we saw a dip. And prior to COVID, Chicago's always been between like a 2, maybe 3% rent growth rate. Nothing crazy. And then when COVID, like as we got through COVID, we saw rents rise 8, almost 10% here in the city, which was just been astronomical. And we continue to see above average rent growth right now sitting in around 4. And so if you think about the overall city has gone through this big rent surge, also like, Chicago's made up of so many neighborhoods, there have been some high performers in terms of rent growth. Portage Park and up in this northwest side area has been some of the strongest rent growth. We've seen a double-digit rent growth just since August when I was pulling the data back then, and when I just recently pulled it now, 10%. So, and anecdotally, I can comment on that too, because as I've come to my new lease renewals, I just had a tenant that moved out of that Sunnyside building that we were talking about. I remember last year I was ecstatic to get the rent that I got, and I got $2,000 for a 3-bed, 1-bath. I mean, updated, with furnaces and AC condenser. And then the guys decided to move out after 1 year. I said, fine. And then I ended up getting $2,300 just recently. So an extra $300 a month, when last year I was excited about it. So you're seeing this happen. And
not to cut you off, man, but that's 300 off of a high number, right? There's a lot of people getting 18 right there, right? Who haven't raised rents. Like there's a $500 delta. Like you were already doing pretty well at 2.
I was. And again, this was a renovated unit, but it wasn't, I took a dining room and I converted it into a 3rd bedroom. And so it's like, we've got like a front living space, but there's not really a dining room space. And then we got a small kitchen. But what I'm recognizing is that you actually do, the tenants that are coming to see the property, they're coming from different areas. So they're coming from different neighborhoods in the city. This one, for example, was coming from Irving Park, and I had a number of other ones. The last tenants, they came from Lakeview. And so it's just like, I think you're getting some of these tenants to look elsewhere in the city, and they're being drawn to the northwest side. And that's helping a lot of this appreciation growth that we're seeing.
Yeah. What is it doing on the investment side, though? Like it's also driving pricing, which is making numbers harder to work between pricing, interest rates, et cetera.
Yep. Yeah. So exactly. So, I mean, overall in the city, I mean, we've got the lowest months of supply that we've seen, right? So there's no inventory, to your comment. There's no inventory. We've been in this low inventory environment for a long time. I want to kind of like lay a little groundwork here because COVID had caused a huge COVID boom. And when I say that, we had like 25% more buyers come into this marketplace than there were before COVID. So it was such an influx of buyers that entered this market, all fueled by low interest rates, economic stimulus, and then just what COVID-19 had done to the way that we live. And so anyways, all of these buyers entered the market. We didn't have as many sellers in the market. So all these buyers ended up eating up all the inventory, and what's left is, some of the lowest records of months supply that we've seen. And so overall, Chicago are at 3.5 months. But as you go into like Portage and Jefferson Park, I mean, they're in the 2s when you're looking at 2 to 4 units. So there's not a lot of inventory. And so when you have low inventory and still a decent amount of buyer demand, it's going to put an upward pressure on prices. And that's what we've been seeing.
Take a step back. What does that mean, months of inventory? Like what define that? And then what is average? Like in a quote unquote normal market, what are we used to seeing?
Yeah, great question. Great question. So months of supply is basically if you didn't have any new listings come to the market, how long would it take for the current inventory of homes for sale? How long would it take for them to sell? So in Chicago, we're at 3.5 months. So if we didn't have any more new listings come to the market in 3.5 months, all of our inventory would be gone, be sold. Okay. It's all based off of the current buyer demand. And so this is how we kind of track like what's a seller's market, what's a neutral market, what's a buyer's market. You probably heard those phrases. And anything that's like basically 4 months and below is the seller's market. Between 4 and 6 is kind of neutral, and then 7 and above is buyer's market. So pre-COVID, we were at 5 months in Chicago. Now we're at 3.5. So, and it's what's really funny is that if you talk to agents, they were like, "Oh yeah, pre-COVID, we were saying we were in low inventory." Well, now it's even lower, right? There's like the scraps that are left. And it's such an interesting, we're in like such an interesting market too, because we've had a huge pullback in buyer activity, where like that huge influx that we had, all of a sudden those buyers, the COVID buyers, they're all gone, right? Because of the interest rates. But I don't think that what gets enough attention is really the seller side of this market, is that sellers aren't selling. And we've had a huge pullback in the number of new listings enter the market. And so our inventory challenges that we have just aren't being fixed. We don't have new sellers coming to the marketplace because they've all refinanced. They realize that it's not worth trading in their current home and buying something new when you've got such a higher interest rate. And so buyers and sellers are making huge decisions right now based off of interest rates.
When was the last time in these neighborhoods we were in a 6+ months inventory or a buyer's market?
Oh, yeah. So, I mean, it's going to date back to, so when we were in the 2008 crisis, like we were at 13 to 14 months. And then ever since then, it just kind of like slowly trajectory came down. I'd have to give you a date on when that was, like when we were in the 6 or 7, but if you were just think like back in 2008, we were like in the teens.
So it's been a handful of years since it's been anywhere up into that buyer's market. Okay. Well, what does it mean kind of going forward? Like, how does the next year play out based on the inventory? I mean, some of this is crystal ball stuff, but
Yeah.
what are your thoughts?
Yeah, no, I mean, that's why the data is great, man, because you can come up with predictions and you can come up with estimates and like what's going to happen. And in my opinion, this whole market is driven by interest rates. And so, like I said, buyers pulled back because interest rates rose, and sellers also did the same thing. So if we have a good feeling of where interest rates potentially will be going, and we look at historical interest rates, and we remember that like over the last like 8 recessions, interest rates would rise and then they'd plateau and then they'd fall. And when you talk to any mortgage lender now, we're all estimating that interest rates are gonna decline here by the end of the year and into next year. So National Association of Realtors thinks that like 5.8 is where we'll be at the end of the year. So if the long-term look is that interest rates are going to decline, we will, and what we know is that inventory levels are still really challenged, and we don't have sellers adding to the inventory. My estimate here is that buyers are going to return. They're going to, and what's interesting is that now we have even more regulations that allow for more buyers to enter the market, even with like lower credit scores and stuff. So that's going to put more buyers into the marketplace, but we don't have like the supply part being fixed, right? So we have more buyers that are likely going to come back into the marketplace when rates fall, and it's just going to put upper pressure on prices. Like in my opinion, I'm very bullish on the real estate market when we look a 2 to 3 year look from now. In the near term, what's probably going to happen is that we're going to continue to see a slight pullback in prices. But as the Fed is able to slow down inflation, and as we know that inflation has been trending downward, we know that they want to be at a 2% target. They're likely pausing on the raise of interest rates. So if we believe that rates are going to fall, buyers will return, inventory will still be challenged, prices will
go. Entrepreneurs, realtors, and lenders are some of the most optimistic people I know. So yeah, it's tough to take. You always have to take these with a grain of salt. You have the elections coming up next year. what is there any tied into what you just said as far as the presidential campaign coming up?
Yeah, sure. Yeah, I think geopolitical risk is always the biggest uncertainty. All of this is based off of if the market just plays out as we kind of think it would play out. Now, there's always the black swan events, right? There's, maybe the Fed is going to continue to break things, and and something just collapses here. I mean, those things we just can't really forecast. I know a debt ceiling crisis is, if we can't come to grips on where the debt ceiling is for the U.S., I mean, that could break things, right? So I think there's a big geopolitical risk always, but at the end of the day, when you think about real estate investing, for the most part, a lot of us like to be in the long-term game where it's, you buy something, then you're holding it for the next 5 years. So
What do you guys think? Both of you guys, I guess, maybe like, my first thought is like, all right, there's no one putting stuff on the market, so you go find people that don't realize they should be selling or can sell, and you pop in this whole wholesaler concept. I mean, eventually there's just, no matter what, if you're wholesaling, knocking on doors, skip tracing, whatever you want to say, you just run out of people no matter what, right?
yeah, I mean, so here's what's fascinating is, like, there's been a lot of equity that has been gained from a lot of property owners right now, and a lot of them don't really recognize that. And it's not just from the market appreciation, but it's just been with the principal pay down that they've done too, and it's I did a chart. So on Instagram, I like to post a lot of, I'm a big data geek, so I like to post some charts and stuff. And I created this chart where the average single family homeowner, if they bought something like January 2020, they had gained about $85,000 in equity since then. The average person owning a single family home in Chicago. And that was through a combination of market appreciation and principal pay down. So you have a lot of owners right now that they've gained equity and they just don't know what to do with it, right? And so it's like, I think there's going to be a huge opportunity once rates decline and sellers are going to realize, hey, maybe it's time to tap into this and cash in. This will be a nice opportunity for us to get a, reduced rate. They've come down from their highs of the 7%. Maybe they'll be into the low 5s or 4s. And then that's when we'll start to see more listings come to the market.
Yeah, I agree. I'll chime in. We focus on, if we can get a physically distressed asset, that's a great asset for us, right? And we're going to pump in hundreds of thousands of dollars to, reposition that thing. I feel it's definitely tight. It's definitely harder. We're not doing as many deals, but there still are deals, right? There's still going to be probate. There's still going to be, the patriarch dies. The kids don't want to deal with it. Two spouses, one dies. The other says, I'm going to a condo. F it, I'm going to Florida. I'm going to Arizona. Like, there's still like the mom and pop. And what we take for granted in Chicago as well is, a quarter of our inventories is 2 to 4 units. Every block in Portage, you mentioned Linder. You go up and down Linder from Lawrence to Addison. Every corner's got a 4-unit, 6-unit, or 8-unit building, right? All those L streets going north and south. Like, there's just a lot of different at-bats there if you can go after them. But if you're sitting back and being reactive, correct, you're not going to find anything. So it's tough. I do think there are still some opportunities for someone in my shoes. I think even if you're looking to house hack, there's opportunities. You just need to be, you can't be sitting there being like, well, I want to do FHA, 3.5% down and cash flow this and be at 10% cash on cash, even though I'm only putting down 3%. You got to be realistic with your numbers. And an answer from the sell side, I'm very curious to see, by the time this airs, I'll probably have 2 large listings, on the market from the sell side, and real curious where they're going to be, right? Because there's no other product out there, right? So will the buyers show up if we put out a real number that's very healthy to us? Will the buyers show up because there's nothing there? Will they say, no, this is too high. I'm still going to be patient and wait. So it's funny to see it from the sell side of what's going to happen.
Is it single family that you have that you're going to?
Yeah, 2 large single families in, Avondale and Logan, and we'll see, we feel good about it, right? We feel good at the normal number, but we also feel like, man, there's nothing there. How far can we push the needle here? Because someone might have been sitting here for 9 months and they might just say, F it, I'll take it.
Yeah, I really like Avondale right now on the single family home front. It's actually, in my Wagner report that I do, I actually put out a top 10 north side list. Avondale has been consistently seeing the best appreciation rates for the single family front. So I like where you're
It's
positioned there.
affordable. It's
Yeah.
under a mill, right? And you can live right
Exactly.
there in the heart of it.
Mm-hmm. Yeah, yeah. I mean, median sale price is around like 650 ish. And so I do like to think about that from the standpoint of where are some neighborhoods that you can get affordable, more upgraded, rehabbed areas, or even new construction type properties. And I bought a new construction home in Jefferson Park. And when I made that purchase in 2020, I was like, where can you get a new construction home under 800? And you just like, there weren't many neighborhoods. It was Jefferson Park was one of them. Or then you were maybe in Portage, or you were going down to like Bridgeport. And so like we didn't want to live in Bridgeport, and we wanted to live in the Northwest side. So like when you think about it from that perspective of where can you get, nice inventory for still at a, I guess you'd call it affordable price, but like lower price, right? And those were the areas that drew us there. And I mean, Avondale is just another one.
Yeah. Well, let's continue on that thread, because now you've been starting to look in Belmont Cragen. It sounds like that's where you made your last purchase.
Yeah. And like to your point, because you talked about like, hey, you can't really find anything. And I was the same way. I was really focused on, hey, I would just continue to grow the portfolio in Portage and Jefferson Park. But then I put together like I put together this neighborhood report, and it looks at every single neighborhood in Chicago, where I break it down by single family homes, condos, and 2 to 4 units. And I added an additional stat. So I look at median sales prices and all those, and like the year-over-year growth. But then I also wanted to know, like, how does it compare to what the average rents are in the neighborhood? And what if I could mush those together to kind of come up with a ratio? And I think we call that like the 1% rule. And so I did that for all 77 neighborhoods, and I published this on a monthly basis. And so what I recognized is that, so Portage was right there, but then Belmont Cragen had some interesting stats that were like very similar to Portage, actually a little bit better, where there was a little bit more inventory there. The price points were lower, and the rents compared to the prices were decently high. And so I'm like, well, why don't I just start looking in Belmont Cragen? And literally when I did this analysis, that weekend, I found a property. It happened to be the most expensive property in Belmont Cragen. It was a 4-unit, but with a 5th non-conforming. And we bought it. We bought it at FHA. I partnered with another friend of mine, and he carried the loan on an FHA. And then, but we kind of split that together. And honestly, that has been a turnkey property where we saw the 2-bed, 1-bath rents were going for about $1,250. And upon the lease renewals, I knew that we could probably get them up to $1,650. And we issued the rent increases, and all the tenants just said, yeah, because you know what? There's not a lot of product out there for a nice turnkey building or nice turnkey apartment for tenants to go to as well. So we kind of had like a scarcity side that's on the renters as well. And I'm recognizing that is that if they are in a quality property and they like where they live, the tenants are agreeing to the rent rates.
I want to bring something up because I get asked this question all the time, especially now with inventory being tight. You take a 5-unit, 5 legal units versus a 4 plus a non-conforming. How do you compare those? What's the offset between the two, or what's your, I always call it, there's risk of taking that 5th unit because it might not be a unit a year from now. Like, so it's really hard to price against that. How do you run your numbers with those?
Yeah. Well, so if you're going to be applying for an FHA mortgage, you can't include any non-conforming, right? So it's always what are the legal units, and you have to make that work on the self-sufficiency test, and you have to make those numbers work based off of the legal units. But when you go into
the self-sufficiency real quick, because that one gets missed a lot.
Yeah.
Define the self-sufficiency test and why it's a big deal here on these 3 and 4 units.
Yeah, it's huge. So if you're going to do FHA, the biggest problem is always the FHA self-sufficiency test. So basically, 75% of the unit rents, market rents, need to cover the PI/TI, so principal, interest, taxes, and insurance. And there's a lot of levers that you can kind of like play to get the self-sufficiency test to work. So like one, for example, is, insurance is one of them, right? So if you're close on the self-sufficiency test, but like your insurance rate that you ended up getting quoted from Allstate is it's $3,000 or something. And, I always tell my clients, like, hey, go back and like raise your deductible as high as you can, right? So you can get that payment to like $50. And that's going to help you pass your self-sufficiency test. And then as soon as you close, go back to your insurance agents and say, hey, put it back to my normal deductible where I want to be. And that's one way that you can help get those tests passed.
Yep. No, good stuff. And anyone looking, just keep in mind, like the 3 units, it gets very, very tough here, right? The 4 units, you have a better shot, but the 3 units, you're only getting income from 2, rates higher than they are now. It makes a FHA house hack difficult in the 3 units in these higher price neighborhoods.
Yeah. Man, what I didn't even realize till just now is you bought a 5 unit using FHA, which obviously 5 will go commercial. And that means that you're really taking advantage of that 2 to 4 house hack FHA, because you got that additional unit that's going to be thrown off income, or maybe you can make it even a legal unit someday. Like, that's huge.
We're looking at that. Yeah. Still trying to figure out the analysis on, like, should we go and make it a legal 5? And actually, Tom, I talked to you about this.
Yeah.
I'm still like, figuring out if it's worth it. So we'll go down that route eventually.
Back to the original question.
Sharon, go ahead, Mark.
I would say, how do you assess that 5 unit versus a legal 5, as far as what that 5th unit is really worth after you get past, when you're really your offer price, I guess?
So if it is a legal 5, yeah, I mean, basically it would change the valuation method of the property, right? So on a 2 to 4 unit range, you're looking at comps. You're looking at, what were some of the other comparable sales. But as soon as you get into the 5 unit range, I mean, either price per unit or cap rate, right? So,
well, no. So when you're making, let me ask the question. So if you're making an offer on a 4 plus a non-conforming, obviously you can't pay what a market will sell for a 5, because you're technically only have 4. I mean, are you basing it only on a 4 and you kind of got a bonus, or?
Yeah, totally. Yes, exactly. Yes. Yeah. So, I mean, I'm always looking at, okay, if we're going to pull comps for this property, yeah, we're always going to look at what are other legal 4s. And then if we happen to find there's certainly not many legal 4s with a 5th non-conforming. So for the most part, a lot of the comps, they are going to be the legal 4s that you're comparing it to, and then you kind of do have that bonus.
Because you guys would probably agree, a lot of sellers are putting a lot of value on that non-conforming unit, and maybe even
people eat it up, right?
Yeah,
that's the people eat it up. I don't think anyone realizes just how hard it is to legalize a unit, not from the admin side, but Department of Building side. And Jason, this is a convo we had where you're upgrading water service, right? You're 25 grand off the bat right there.
Exactly.
Okay.
Yep.
You're 6'11", cool. Got the place, dig it down. You need that extra inch. You're out another 70 grand. Like right off the bat, like it can be $100K endeavor, and so it gets very hard to justify the cost of legalizing it. Even though a lot of people just think like, oh, this is great. Like I have a 5th unit, I'm handing some paperwork, and it'll be legal.
Well, you could even run into the opposite issue of, maybe there's something happened in the building and they come in and they say you either have to get plans to make this legal or you have to demo it out, which either one of those is not a good scenario, and either you're paying what you just said, or you're 20 grand to get permits and demoing it, and then you have nothing.
Yeah.
So there's always a risk when it comes to having that non-conforming unit that I try breaking down for people.
Yeah. And one more thing, not to beat a dead horse here, but in certain areas, like if you have great comps, it's almost like better to keep it in that 2 to 4 space, if that makes sense. Because like the NOI approach would not justify the value you're getting, because so many people are, I don't want to say overpaying, but paying a premium for that 2 to 4 unit, right? You almost, in other scenarios, it makes perfect sense, right? If this thing's cash flowing like a pig and you're in a cap rate area, you're down in Lakeview and cap rates are in the 5s, like great, get to, we're doing that one right now. We're building coach shops to go from 4 to 5, and it makes complete sense for us because it'll drastically change the whole way that the building gets evaluated. But it could work against you too in some of these areas.
Right. Yeah, exactly. And we're still doing the deep dive on that and trying to figure that out. For now, it's like our biggest hurdle was, hey, if we can get our rent increases, let's analyze after that. And that was huge for us. So literally every single one of our tenants agreed to our $300 rent increase. And I thought that was really shocking to me. And it just adds to our cash flow. Because again, like we bought an $830,000 building. This was the most expensive 2 to 4 unit you can buy at Belmont Cragen. But because it has that 5th unit, it really does cash flow for us, and it really works great. And we bought it 3.5% down FHA. And it's just one of those gems, man.
Yeah. What if you don't mind sharing, like, major intersection you're by? Because Belmont Cragen's big, right? It goes from Belmont down to, there's like Grand at some point. South of Grand.
Yeah. So it's Fullerton and Central.
Okay, so you're more on the north side. You're, call it, a mile south of, call it, Portage.
Yep, exactly.
Well, yeah, because it's a big area, and I think you'll see, if you're just looking at pricing, you'll see the Belmont side is going to be much different than when you keep every corridor. I'm going to assume you're going to see pricing drop until you're out of it to the south.
Mm-hmm.
So, well, cool. Jason, let's talk a little about you mentioned you help a lot of people with investing as well through Greystone. Talk about the concept of why did you make everyone in your company, they have to be an investor themselves. Like, it's a great concept. Love it. Like, talk to us about, where'd that come from and just the type of people you attract because of that.
Yeah. I'm really proud of Greystone because, we're only a couple years old and we seem to be developing a culture of, just this investor mindset. And it all came from how I built my business. I started as a real estate investor. I wanted to be a flipper. I thought I was going to be the next biggest, greatest thing in the flipping world. And, I did 3 flips, and then I was like, you know what? I actually made a hell of a lot more money selling properties to my friends than I did on those flips. And, and so I had gotten licensed while I was flipping houses, and I would post about those flips. And like, my first flip was really, it was great. It was sunshines and rainbows. And then I was like, oh, then I want to take on this bungalow and like do a new construction dormer addition. And I didn't realize the permitting time, and I totally underestimated the budget. And, my architect ended up getting into a coma, and like, I just went through some crazy things with this flip. And, while I was doing that, I was, just posting about real estate, and some of my friends came to me and they're just like, hey, can you help us buy a condo? And so I would go show them houses, in my construction clothes, because I was GCing these projects. I really wanted to be hands-on, to be able to kind of provide the, first-time home buyers with advice. And they respected that because they're like, here's a guy who's out there doing it. He knows like some renovation things that we can do with these properties. And so my first clients just kind of valued the hands-on approach that I was putting into my other projects. And that just kind of snowballed into building a client base and realizing that investors actually have some of the most tangible advice that they can give to just regular buyers and sellers. Because 1, we care about the numbers. 2, we have more of a vision of how we can renovate, and we also are a lot more resourceful because maybe we've done some of those renovations, and we have a whole book of business of, guys that we've hired before and we can recommend to other clients. And so just like the resourcefulness of that type of agent is so much more valuable than another agent that hasn't been through those investing experiences. I get a lot of my clients now that are very interested in like, hey, how do I handle tenants? They're interested in kind of getting into the landlording space, but there's this big wall that they're struggling with of, I don't know how to, handle a disgruntled tenant, or, if there's noise issues, or like, what do I do on an eviction? And so being able to kind of give them the hands-on approach that, hey, I manage my own properties. Here's what I've done in these situations, be able to offer that advice, puts a lot of new buyers or just seasoned buyers at ease, because they can go to somebody that has done it before. And so that's the whole concept is, in my opinion, it's agents that are actually out there doing it are some of the ones that can offer you the best advice, because truly that's what real estate agents are. They're people that offer you advice, versus just people that open doors. So in order to stay relevant, you've got to have that advice side.
Yeah, that's great stuff. And, a couple episodes before this, we had Michaela on, and she talked about, regardless if it's a single family home that you're going to live in, or, you're buying a 12 unit, at the end of the day, like, it's a wealth generator. Like, the whole premise of real estate is, multi-generational wealth. You need to think of it through that lens. Even if it's not a pure investment, if we don't offer what you just laid out, you're doing a disservice, right? Yeah. It's more than just that intangible feeling.
Totally. You're delivering it through data. That's huge.
Yeah. And I always like to tell, clients that are just buying a single family home, for example, you know, I give them, here's what you could rent it out at. Because in reality, like the way that I look at, you know, my holdings is I bought my house, but I'm not going to sell my house. I'm going to rent it because I know that I can rent it for a decent penny. And so I give that same advice to some of my clients, and then they ultimately make the decision on if they want to take on, they go buy their new property and they want to keep the current one as a rental. A lot of them try it for a little bit and then they end up selling it. But it's just good to have that secondary exit. And because you never know, like what happens if the market turns and you can't sell the property, right? A secondary exit is you can rent it at least.
Stop. Mark, anything else to add here?
No, I'd love to, your Wagner report. Like, tell us how you came about that, and like, I don't know, that's awesome.
Yeah. So I started before I got into real estate. I was more of a financial analyst for Allstate Insurance, and really learned how to like put together charts and stuff. And what you don't realize is that every single real estate agent has access to so much data. It's just that nobody does anything with it. And so because I had some PowerPoint and Excel skills, I took all this data and I'm just like, oh, wow. I created this report for me to be able to use it where, I was able to find, where can I find, some of the best appreciating areas to buy my first house hack? And then how could I expand my portfolio to find an area where, we could have nice rents and the prices of the real estate there was still working out. So a 1% rule. So just literally, I've created this stuff for my own investment criteria. And I'm like, well, if I find it useful, somebody else is going to find it useful. So I just put it together on a monthly basis. And additionally, like from the real estate agent side, like if you're analyzing the data on a monthly basis and you put it together in a package, you're going to have your pulse on the market. And when you send it out, it's a great marketing tool. People are going to look at you as like the subject matter expert. And they're going to be like, that guy knows what he's talking about. He sounds smart. Like he's got data to back it up. And he's like confident in putting out opinions. I'm going to go, talk to that guy. Right. So it's just like those little concepts that seem to be working. And so I just continue to do it on a monthly basis.
My guy Shay from the office, he's talking about, he's been working here since October. He's been talking about the Wagner Report ever since. So
there you go. Give him a sneak peek for the next one.
I know. Yeah.
All right. Ready to wrap?
I'm ready, man. Jason, you ready?
Ready.
All right. What's your competitive advantage? How will you be able to do all this while others wish they could?
I'm going to say we're all investors, man. And, if you're an investor and you're out there doing it, like play the game at the highest level and just continue to network, man. And that's what Greystone's all about. We give information, we try to teach it, and also do 75 hard.
There you go. Sneak it in.
That's your competitive advantage right there.
All right, Jason, what is one piece of advice you would tell someone that is yet to buy their first property on the northwest side of Chicago?
Yeah, go for the house hack, man. Like, don't flip a house to start. Go for the house hack. The house hack is one of those things where you can get a loan over $900,000 and still put down 3.5%. It is a ridiculous tool that not enough people take advantage of. So go for the house hack. You can reduce your living expenses. And then when you move out, that thing is going to continue to pay you. And also, I think another really big important point here on those house hacks is that if you go for the more expensive property, you end up paying a lot more in principal pay down than you would on a property that's only like a $400,000 one. So if you were to think about it from that perspective of like, hey, let's look at the $800,000 properties, even if you think mentally you can't afford it, but if you run the numbers and you realize how much you would actually be paying on it, that is going to be a better buy because of the principal pay down that you pay on that type of property. So I think that's a really important tip to keep in mind.
Yeah, so you'll build your equity in a lot faster. So 10 years from now, you have I love that. That's awesome. All right, what do you do for fun?
75 hard. And actually, no, I want to plug this.
You are
too,
sick. That would be fun to you.
Yeah.
That's how I answer it.
No, so I've got two kids. I've got two kids that are to be turning 2 and 4 this year. So I spend a lot of time with my family and I really enjoy them. But also, one of my big goals this year is to do the David Goggins pull-up challenge, which is doing over 4,000 pull-ups in a single day. So I'm actually training on that. In June, I plan to actually go for it. And so that's kind of a cool little fun thing.
Hold up your hands. Let's see them calluses.
Yeah.
How big those things getting.
Yeah.
Yeah, they're bad. I moisturize every day. I got some hand balm that I use. There's literally strategy that you need to do with your hands.
Well, they give out before your muscles, right? Like that's the
Yeah.
part that would tear first before even like if you're in shape, like that'll give out before you're even ready to quit, right?
Yeah, exactly. It's the tear in the hands that it's just painful, right? It's just like, you get a little nick on your finger and you're just like, man, this thing just doesn't go away for a number of weeks, right? Yeah, so I mean, just imagine if you're only 2,000 pull-ups in, you still got another 2,000 to go.
All right.
That's awesome.
What is a good book, podcast, or self-development activity you'd recommend to our listeners?
Yeah, first and foremost, I mean, Rich Dad Poor Dad, that's like a prerequisite. Everyone needs to read that one. But then Traction. Traction was a great book. It took my business to another level. I came up with this 10-year target of where I wanted to be. And when you do that, and then you just kind of work backwards of like, how do we get there in 10 years? Mark, I remember asking you over the weekend, what was the magic number for you on the managed units, and like you knew it right away. And I thought that was a really cool thing because it's also the same thing. Like if you can put a 10-year target that's out there and then just work backwards of like per year, what do you need to be at in order to get to that? All of a sudden it's an impossible goal that becomes very possible.
Yeah, we've been using Traction EOS since 2017. We actually had the people from EOS headquarters out here. They did a little video that we're going to be on their website for. So,
Oh man, can we get Gino on the show?
yeah.
Do it.
All right, awesome. Besides yourself, name one person in your network you'd highly recommend as a quality resource to other investors.
Yeah. I want to name a couple people here. RJ DeLeon and Nikki DeLeon. They were just like instrumental for getting me kind of plugged in. I really, really appreciate them. But then also Jenny Berger with Property People she's also another Greystone broker, but she's just if you follow her on Instagram, she's just incredible with the amount of what she teaches. And Jenny hasn't even been doing it that long, but she learns so much, and then she just gives so much valuable information for free on Instagram. And in my opinion, she's just a person that you should follow. And then if you get a chance to meet her, like she's just tremendous.
Yeah, agree 100%. Every time we go to a meetup, love seeing Jenny there. Episode 82. So for our listeners who joined us recently, go back and listen to her. Great episode. And she's done a ton since then. We should probably have her back on.
Yeah, and then RJ and Nikki, episode 43, they both were on, and then 146, RJ was back on. So look at that.
Here we go.
Look how synced we
Combine all
are.
things.
You looked up one, I looked up the other. Like we could have totally crossed there. Like, man, we are on the same page, dude.
People actually listen to us too, so we can't even make up the numbers. I used to do that back in the day, by the way.
Yeah.
So no, but I'll take a second to plug that Chicago multifamily meetup, and the day we're recording this May 15th. We'll go to the May one tonight. Zach Posey speaking, but by the time this airs, it'll be ready for the one coming in June. Like that's a great meetup. Casman had it, and RJ, and now Zach, and like Jason, I see you there pretty much every month. Like that is a great one. If you're looking to get involved in the city and get looped in, like I highly recommend it. So, all right. So Jason, you provide a ton of value to our listeners. How can they learn more about you? Is there any way they can provide value to you?
Yeah, just reach out. I mean, you can text me, 847-997-1639. But, follow me on Instagram. It's just Jason Wagner _real estate. I'm constantly posting stuff. And then additionally, if you want to sign up for the Wagner Report, that's the easiest way to get it. Just in the link in the bio, you can sign up for the report and you can see what the most recent ones look like. So Jason Wagner _real estate on Instagram.
Hey, you can sign up for 75 Hard on straightupchicagoinvestor.com.
Yes. There you go.
Yes. We're going to put like a click sign up here right on your abs. Like I was picturing like you, like, yeah, perfect. I got it all laid out in my head. Yes. I love it.
All right, Mark, are you ready? We got a Chicago fact to do.
We do. All right. Today's Chicago Fact is brought to you by Renovo. We're going to play for Sharice Riley, who bought a t-shirt here just last week, it looks like. All right. So you got your name pulled. Awesome. Pulls fast. That's awesome. All right. Sharice, if myself or Jason get this right, you'll get a $50 gift card brought to you by Renovo. Let's do it, man.
All right. So I did this one doable. I love that I just say this with no idea what your knowledge is of the subject. So the Jeff Park Transit just got a $25 million renovation over the last few years. I actually walked by it today, heading to Weston's Coffee Shop. It's a great little spot owned by Nick Davis. But it has a Blue Line stop, a metro stop for the Northwest Milwaukee line, and it also services how many different bus routes? And your options are 4, 12, 25, or trick question. It is trains only. 4, 12, 25, or 0. How many bus routes does the Jefferson Park Terminal service?
Oh, it's 12. I have no clue. I just trying to sound confident.
Jason?
James,
was-
come on.
Yeah, I was also going with 12.
Look at that. I spaced them out nicely. You guys were able to decipher it. Nice work. Well,
Really? All right.
nine CTA, including the 91 Austin, which I used to take to high school, and then 3 Pace buses heading out to the burbs.
I was really confident in 12 because I didn't think you'd be more than 25, but you threw in the trains only. I'm like, oh, man. You might have got that one, Jason, as far as not being able to eliminate that option, but I wasn't sure. But all right, Therese, you win. $50 gift card brought to you by Renovo Financial. So, all right, Jason, awesome show. Thanks for coming on here. Tom, thanks always. Listeners, build your team. If you want to check out our website, we're adding people here daily to our Build Your Team as far as the different architects, accountants, everything, title companies, everything that you might need to build your real estate team here in Chicago. We're helping you refer you the people that we know either been on the show or we know that me and Tom have used that we know that will not let you down. So check it out. Build your team at straightupchicagoinvestor.com. Thank you, Jason. Thank you, Tom. Listeners, we'll see you next week.
Thanks all.
Thanks, guys. Appreciate it.